Yes.
Okay, just a little bit of a disclaimer. I am fighting a head cold, so if you see me taking a sip, it's just so I don't completely lose my voice. Uh, anyway, I think I've been excited about this opportunity because it's such an important topic. You know, it's crucial for many entrepreneurs and businesses in the construction industry to answer this question, and that is how to secure approval for a business loan, particularly when working on government projects. We all know that financing is usually the critical step in the success of any construction related endeavor, and especially when dealing with the complexities of government contracts. Before I jump into those details, I'd like to share with you a little bit about myself and about Columbia Credit Union. I've been a lifelong banker. I didn't put the number of years because when I read it, it was a little overwhelming. But my career began when I was in college, and I'm still doing it today. Most of that time, I've been involved in commercial lending. I joined Columbia Credit Union as the chief lending and chief credit officer 7 years ago. And I joined because I've always respected Columbia's reputation in the community, and I knew that their values aligned with mine very well. So Columbia has served our community for more than 70 years. We do offer banking services to both consumers and businesses. We have 14 local branches throughout Clark County and one in Portland. Our team of 13 business lenders average more than 20 years experience, and we serve businesses of all sizes. In the last 3 years, we've helped hundreds of small businesses borrow more than $300 million with loans as small as 15, 20,000 to those greater than 20 million. So all shapes and sizes. We are proud to serve our community. I want to share with you real quickly our core values of people. So our members and our staff, our community, we believe that a vibrant community is critical to long-term happiness and quality of life for everyone in the community, and financial wellness. So as financial wellness is a core, not only for people, but for businesses. So we are committed to providing resources to make financial wellness a reality for everyone. You may not have even known that credit unions do business loans. If you're asking yourself that question, let me tell you that you're in the right place. We do. So why choose a credit union over other options? And we're going to talk about those other options today too. First of all, credit unions are not-for-profit organizations. So generally, we can offer lower fees and interest rates compared to other lenders. This can result in significant savings over the life of a loan. Credit unions are known for our personalized approach to banking. We will take the time to understand the needs of our members and may offer more flexible terms to the loans in order to accommodate those special needs. We are community focused. Credit unions are deeply rooted in the communities we serve. This local focus can lead to better understanding of local business needs and challenges, making them more responsive and supportive of local businesses. Lastly, we are member owned. As a member owned institution, credit unions are accountable to their members, in other words, customers, rather than shareholders. This can lead to more customer-centric approach to banking and lending decisions. Now, it is important to note that not all credit unions offer business loans. So I would advise you to check with your local credit union to see what your options are, if they have them available. If you're not a credit union member, we would love to talk to you about joining Columbia Credit Union, obviously. So now let's talk about what you really want to know, and that's what do you need to know before you apply for a business loan. Some of what I'm going to say may be new information, so I want to emphasize the most important thing to remember here is that we are here to help you every step of the way. I encourage you to establish a rapport with your lender, ask a lot of questions throughout the application process, and really the first thing to understand is your project. So before seeking financing, I suggest it's essential to have a clear understanding of the project you're undertaking. What is the piece that you will be doing and what does it include? So think about your scope of work, the timeline, and of course the budget. Government projects come with specific requirements and regulations, so familiarize yourself with those early. And again, we are here to help. You will need to prepare a detailed business plan. A well thought out business plan can be key to convincing your lender of the viability of your project. Your plan should include a detailed description of the project, your experience in the field, and this is important. We really need a realistic financial projection. Focus on the realistic and maybe even leaning towards pessimistic versus the best case scenario. Things to focus on will include, how will you be paid? So what's the timing of those payments? Are you a sub? Will you be a sub to a sub? Will there be retainage in the project that could influence your cash flow? When you model your cash flow conservatively, you'll be more likely to have adequate financing to keep your project on track and your people paid. Also, in that business plan, highlight your track record of successful projects. That can help build credibility. So don't be shy about describing other projects that you've done, even if it's not quite to the scope of what you're proposing in this, it's still relevant. Gathering necessary documentation. This is a piece that the lenders will always say, get it to me timely and I'll get you a timely response. The reality is it's not always easy to do in a timely fashion. So again, working with your lender will be important. We do require various documents to assess your loan application. These may include financial statements, tax returns, project contracts, and the like. Having these ready in advance will streamline the application process and demonstrate your readiness. I will share with you a screen that shows what we look for initially in terms of that documentation that's coming up. I know you know this one. It's established a strong credit profile. Your personal and your business credit history play a significant role in the loan approval process. So ensure that your credit reports are accurate and up to date. If there are any issues, work to resolve those before you apply for a loan. If you know there's something on the credit that your lender may have a question about, get in front of it. Let's make sure that we're having those conversations because, again, we understand that there might be anomalies. And so if we can understand that to get over those hurdles, if they are hurdles, then sooner is better. Explore government loan programs. So government-backed loan programs, such as those offered by the Small Business Administration or USDA, can be valuable resources for construction companies. These programs often offer more favorable terms and possibly lower interest rates than traditional loans. Not all financial institutions have delegated SBA lending authority. A lender with that authority can save significant time in the loan approval and funding process. If an SBA guaranteed loan is right for you, ask your lender if they can approve the loan on behalf of the SBA. Of course, I'm saying that because Columbia Credit Union does have delegated SBA authority. Now, I'm not suggesting that everybody needs to have an SBA or a government-backed loan. I will tell you that the SBA is there for a reason, and it's to supplement, to encourage financial institutions to make loans that maybe would be a stretch otherwise. And so if you've heard things about SBA and maybe prefer not to use that, that might be an option, but keep all your options available to you. You will want to demonstrate financial stability. Obviously, lenders want to ensure that you have the financial stability to repay the loan. Provide evidence of steady cash flow, healthy balance sheet, and the ability to manage your debt responsibly. Again, I think that's pretty basic. One of the questions was, what do we offer businesses? So I'm just going to click through these here. You can see that it's just about everything that your business would need to have. Lines of credit, term loans for equipment, real estate loans, construction loans, CapEx lines of credit, again, SBA, but credit cards, I mean, other things that support your cash flow. And then all the deposit services, including online services, merchant services, fraud prevention tools, all of which we have expertise in and we'll be happy to go over in detail with you. So here's a relatively short list of required documentation. You'll notice that we're asking for 3 years business federal tax returns. Some of you may be saying, I have 2 years, but I haven't even been around for 3. We will take what you have and work with you from whatever your starting point is. If you do have 3 years, obviously we will want that. We also understand that coming out of the pandemic, maybe 20 and even 21 were fantastic years. So don't be afraid to show that information. We understand that business may have been on the rise since then. So securing approval for a business loan for a construction-related company working on government projects requires careful planning, thorough preparation, proactive approach. So by following these steps and demonstrating your readiness and capability, you can improve your chances of obtaining the financing needed to succeed in the competitive industry and hopefully win that bid and get to work on that bridge project. Again, we're taking questions in the chat. We're also going to have an open opportunity at the end of the session. In the meantime, I do want to share, again, I'm Marc Timm. I'm the Chief Lending and Credit Officer here. Joe Storm is the Director of our Commercial Services, and either one of us or anyone on our team is available to answer questions for you.
Fantastic work. Thanks so much, Marc. We're going to have you stop sharing screen there real quick.
Right.
And we're going to switch over to our next presenter, representing Banner Bank, George Martin.
Okay.
Hi, George.
Give me a second here to share my screen. Okay, can everybody see that?
You're good.
Okay. So I am George Martin with Banner Bank. I'm located here in Vancouver, Washington. Been with Banner Bank for 5 years, and kind of like Marc, I've been in banking since the early 90s. And in fact, all that time has been, most of the time has been in Southwest Washington, Clark County, a little bit of time in the Portland metro area. So been around a while. Banner Bank is a commercial bank, established in 1890, headquartered in Walla Walla with a large presence in Spokane and Bellevue. We are operating in 4 states in the Pacific Northwest, and those little red dots indicate where the majority of our branches and business banking and commercial banking centers are, basically up down the I-5 corridor, and then 84 over in Idaho. So as of December 31st, 2023, we had about $15.7 billion of assets. And again, as a commercial bank, we are publicly traded. So the products and services offered by Banner Bank, most businesses have a need for some type of line of credit, and the biggest one being a revolving line of credit. You borrow against it for short-term purpose. You pay it back after a period of time, and we'll go anywhere from a low of 50,000 to well over 10 million for loans and lines of credit. Our capacity, I believe, is in excess of 50 million for total credit exposure. But that can be a revolving line of credit. It can be a line of credit to purchase equipment. It can be a term loan to purchase equipment. And for those of you who don't know, a term loan is simply a period of time, say 5 years, where the loan is repaid. Unlike a line of credit, typically is repaid back annually with an annual renewal. We also do real estate loans, both owner-occupied and non-owner-occupied in certain segments. As Marc had mentioned, the SBA program is a very valuable program, particularly for small businesses, and Banner Bank does underwrite its own 7A and 504 loans. And then the USDA Guaranteed Loan Program is another government sponsored program that affords lending to small businesses in the United States. So we had the traditional checking and savings accounts, both business and personal, including money market accounts. And rates have been trending up recently, so savers are actually kind of happy to getting a little bit more bang for their buck on their interest income. Businesses also tend to need treasury management services, which is kind of an all-encompassing term. And it can be account analysis, where because it's a business account, by law, banks can't pay interest on those. We do an analysis of that and try and generate some earnings credit back to the business that can be used to offset other services. Remote deposit capture is simply a check scanner that sits on your desk, and if you're getting paid by checks, you run that through the check scanner and it posts to your account. We have online banking. We can do most of your banking online and never even really need to set foot in the branch sometimes. Credit and investment sweeps for both lines of credit, and if you have excess cash, you want to invest those, that can be fully automated. And then ACH origination and positive pay are a couple of other types of treasury management services where you can pay bills online and also send files to the bank if you've got checks that are trying to clear, just to verify that, hey, this is a valid check. But Banner Bank has the full suite of treasury management services, as well as commercial cards. If you've got project managers or superintendents, some of them may need to have a commercial card for specific purchase purposes. We offer those as well. And then finally, merchant services. If you're accepting credit or debit card payments, it can be a virtual terminal on your desktop. It can be a standalone terminal, or even a mobile card reader that you take out, take out to the field and collect your payments that way. So again, traditional commercial banking products that Banner Bank offers across the board, they're geared towards businesses. So the requirements for loan approval, I kind of approach this from it's kind of called the 5 C's of credit: capacity, capital, collateral, character, and conditions. And these are kind of what we as lenders look at when we're doing our due diligence and analysis of a business. So the first one, capacity, is simply the ability to repay a loan. With a line of credit, do you have the short-term assets, the AR, the inventory, the progress billings, if you're a contractor, that can be readily converted to cash to pay back the line. And for loans, the repayment of a loan obviously comes from cash flow. And by cash flow, we typically mean EBITDA, which is a measure of cash flow, earnings before interest, taxes, depreciation, and amortization. And so for us, a good, all around, generally speaking, a good debt service coverage ratio, which is simply the EBITDA compared to the debt service or the loan payments, of 1.25 is the minimum of what we typically look for. Then on the capital, that refers to the equity in the business. Is there sufficient capital, paid in capital, retained earnings in the business to ensure the business is not highly leveraged? Because as bankers, we're lenders, we're not partners in your business. And so we don't want to be involved in a business that is very highly leveraged and doesn't have enough equity in the business. Collateral, again, this is kind of, it's kind of the backstop there. If for some reason there was the worst case scenario, is there adequate collateral there that the bank could go, to repay the loan as a tertiary repayment source? It can be for lines of credit, it can be the AR, the inventory that you've got supporting the line, or for real estate, it can be the real property itself. And you may have heard the term loan to value, or LTV. That's simply the ratio of the borrowings compared to the collateral. And the lower the LTV is, the better from a lending standpoint. The fourth one there, character. Again, when times get tough, is the owner, do they have the character to repay their loan when times get tough? And that's something you don't know until times get tough. So we do look at credit history, we do look at FICO scores, but as a measure of trying to get some support there for the character, we will ask that borrowers, their owners, guarantee their loans. Okay. And then the last one there, conditions, simply is your market conditions change, rates go up, economies contract. Is your business flexible enough and adaptable enough to weather those changes? So those are kind of you know, on a high level, 30,000 foot, those are the kind of the main things that we as lenders look at. And then kind of, these are more considerations just for public works projects, especially if you are a contractor or a business that's bidding on public works contracts. Are you the general contractor or are you the subcontractor? Or as Marc said, a sub to a sub, because the farther you are down the chain, you know, with contracting, it's paid when paid. So if you're a subcontractor to a subcontractor, and that subcontractor doesn't get paid until the general contractor pays them, it can be a while before you receive those funds. Okay. Knowing the bid requirements of public works jobs is incredibly important, because there's a whole array of legal requirements out there when you're bidding on public works jobs. A big one obviously is it's a prevailing wage job. And did you account for that when you put together your bid? Do you need to post a bond? If you're a subcontractor that's farther down the chain, maybe not. But as you grow and you're a larger subcontractor on a public work job, you may be asked to post a bond. All payroll for public works jobs has to be certified. So that's where getting in with your accountant and having all that explained to you, so that's not a surprise when it comes time to submit a progress billing and you're wondering why you're not getting paid, because you're not in compliance with the certified payroll requirements. Kind of like everybody else, we'd like to have accurate financial reports, work in progress report, agings, balance sheet, and income statement are all very important to look forward and to monitor on an ongoing process. And then that last bullet point there is, in my experience, a successful public work contractor or company has a team behind them, which consists of their attorney, their lender, their CPA, and their insurance agent and or surety if they're needing to post bonds, because with those four, they can really help guide a company on some of the public works jobs that are out there, and when it comes time to bid. So kind of my thoughts there closing. Again, that last one, have a good team behind you and go into it with the support behind you, so it's going to help you alleviate any problems down the road. And I will stop sharing.
Fantastic. Thanks so much, George. Last but surely not least, we have Stephen Phan with Craft 3, an alternative banker. Stephen, we're excited to hear from you. Thanks for joining us.
There we go. I'm unmuted. There you go. I've used Zoom before, y'all. So I'm here to share a little bit about Craft 3. We are an alternative banker, bank like Julia said, but we are not a bank. We're what's called a community development financial institution. You may have heard that acronym before, CDFI. We're one of the larger CDFIs here in the Pacific Northwest. Been around since '94. On the note there, you can see we've done about 700 million over the last 30-ish years to nonprofits, individuals, small businesses. We are a nonprofit similar to Columbia, like Marc said earlier, but we are not a bank in the sense that we do not have depository accounts or treasury, no credit cards. We strictly do loans for folks. And you might be wondering, like, what types of loans do we do? So when a borrower is unable to obtain a loan from a credit union or a bank or a traditional lender for various reasons that you can see on the screen here, whether it's poor credit, limited collateral, those 5 C's that George mentioned, oftentimes bankers will reach out to us or direct clients to us, because while we utilize the same 5 C's of credit that the banks utilize and the credit unions utilize to decision loans, we're able to be a little bit more flexible because we're utilizing our own loan funds, and we can take on a little bit more risk when it's aligned with our mission and we're supporting the community or small business. Some of the things we see most often, like you see here, is poor credit, limited or no collateral, entrepreneurs that only have an ITIN, or bridge financing for nonprofits or other types of bridge financing is what we see most often. We do also have support in Spanish. That's going to be, we have Spanish speaking lenders, business coaches, educational content, and then we support the application with Spanish speaking interpreters, but our loan documents and applications are in English. They're not in Spanish. That's a yet. We say that because we're working on it. Something that folks often forget is this journey is not a straight line, and it oftentimes comes backwards. So this is a very quick diagram of like where you can see yourself, where you may have seen some difficulties, and we'll loop back to this. But as you can see, a team, like George said at the beginning or at the end of his, where assembling an advisory team is really important so that they can tell you what you see, what they see based on their experience. Credit changes, this is kind of through the entire process of idea to loan. Or if it's not just the loan, it's, you know, to the next point in your growth. We'll be talking a little bit about financing vocabulary, the types of funding you may see, and then how you can plan your next steps. So the vocabulary, you know, we've talked a ton. There's a lot of different types of words that you'll run into, see here. Big things like micro lenders or break even, cash flow analysis. You may not know those words in detail, but you'll be able to work with folks, especially if you have a good team, to help you with this. It's okay to ask questions, especially when you're in this process. You should ask questions. That's why you have the Georges and the Marcs and the myselfs of the world, is to support the business owner through this process. We're the experts. We do this in day in, day out. We want to be able to help you. Oh, and Julia helps people too. My bad, Julia. And we want to be able to support you wherever you are. There are a few types of different types of funding that you should be aware of. So self-funding sounds exactly like it is. You are figuring it out yourself, bootstrapping your own business. You know, there's no application process because it's your money. The sources are your own money. So whether it's your retirement accounts, your savings, if you're able to float your own credit cards, that's a source of it. But you're risking your own funds. You're risking your retirement potentially. It's slow because if you don't have enough money, you got to earn some money to put towards your own business. It takes time. There's grant funding through governments, foundations, corporations, sometimes. As a grant, as it sounds like, there's no repayment. It's hard, however, because it's a competitive process. There's few dollars to go around for what's needed. And there's going to be work after the fact of you getting the money, that it's not just here you go, but you're going to have to report back with jobs, outcomes, certified documents similar to the payroll, like that George was talking about earlier. Equity financing is where you're offering up a portion of your business for some funding, essentially. So there are angel investors, venture capitalists. You can bring on your own personal partner. Oftentimes, it doesn't need to be repaid, but you're giving up ownership and control of your own company. That dilutes the ability for you to grow or make decisions on your own. Debt financing, which is what we are talking about today between George and Marc and I, is where you're borrowing money with the promise to pay us back with a little bit of interest. There are banks, credit unions, alternative lenders, as you can see here. The key ones that we're going to talk about, which we've already talked about, are the traditional lenders, Marc and George, which are banks and credit unions. And then there's us, which are CDFIs, and we're typically on the alternative side as well. There are a number of CDFIs in the Portland metro area, so you can look them up or reach out to me later if there's questions about who you can partner with or what makes the most sense. But with these, the big considerations are loan eligibility. So you have to have the financials, you have to have numbers, you often have to have historical financials as well. But depending on who you're working with, sometimes there's some flexibility there. There's also an interest rate, which means you're going to be paying back more than you borrowed, but that's the cost of the loan, just like any other loan if you've ever taken one. this is a really quick graph that shows you how much risk these folks are typically willing to take versus how much it'll cost you. So as you can see, banks and credit unions typically take lower risks, but they also charge less. For us, you can see, I don't know if you can see my screen here, but the community development financial institutions, we're willing to take on more risk, but it also costs more. And then predatory lenders are on the opposite end of the spectrum, where they're willing to take a lot of risk, but it's going to cost you a lot of money. And oftentimes, and as the bankers can attest to, when you get into a predatory loan, it ends up cycling, and you end up in a cycle of borrowing very expensive money and then looking for other money to pay this off. And it becomes very hard to get out of. When you're planning your next steps for what types of capital to take on, one of the key things that I personally want you to know about and not fall into is the trap of predatory lending. Oftentimes, this is promises for cash really fast. The application is very simple. They have typically a few questions about you, what you want to borrow, and then what types of collateral are available. But it's hard for you to understand how much it's going to cost you. The total cost of loan is hard because, for a loan like us, a loan fund like us, or a nonprofit lender, or banks or credit unions, they're going to have amortization schedules. They're going to tell you exactly how much it's going to cost you, what the fee will be, what the origination costs. It's pretty direct. With these loans, they may front load some interest or fees. They may add it on. It may be compounded monthly instead of annually. There's a number of ways, and it's really unclear for you as the borrower how much it's going to cost you. And that's a concern. No evaluation. So they're just going to trust that you're going to tell them that you can afford the money, the borrowing, the amount that you're borrowing. When there's no evaluation of how you're going to pay it back. So both Marc and George talked about financial packages with taxes, financials. We as lenders look at that to see how much you can afford and right size that loan. To see if you can pay us back, because if you can't, that's a bad loan for you and for us, but also so that you can plan for an appropriate amount of, we call it debt service, but we can plan for how much you can afford to pay based on your income. Reputable lenders, I just went over this. We're going to look for all those things. We're going to look for your returns. We're going to look through your financial statements. A personal financial statement, something that most lenders that are reputable will ask for. It's going to ask you for your personal liabilities and your personal incomes and what that looks like. George had that last slide that George had with the items to keep in mind for public projects. That's great, because that's something that will be important for every lender. And I would, when Julia sends these out to y'all, that's one of the key ones I would take away. We, as a community development financial institution, are looking to support with long-term relationship building. We're trying to look into what you do, where you're at, and support you with essentially meeting you where you're at, whether it's needing for connections with folks that are bookkeepers, Spanish speaking, especially lawyers, other advisors, similar to Julia, Apex Accelerators. We partner with a lot of other nonprofits and government entities to support folks. We also have online learning platforms for small businesses that we can support and connect folks with. So for us, it's not just doing loans. That's one part of how we are a part of the community, but it's really getting to know the people, the businesses, and how we can support the community. When you look back at this, based on just what we've talked about quickly here, we want you to be able to see that there are spaces for support in all these items of your journey, whether it's understanding your financial statements, how to ask questions to a lender, or, what does your credit score mean? Craft 3 and other nonprofits like us are here to support you as a resource, but also connect you with other trusted resources in all these pieces. If we don't have the capacity to support you with creating a business plan, we have other resources that may be able to. Just one example among other things: credit scores, rebuilding, understanding what's on it. We have support with all that. When we're reflecting on the journey, we want to make sure that you know what you can do to move forward, what you can do to ask for more support where you're at, but oftentimes that requires one-on-one conversations. So we're happy to take on questions here to be able to support you as the business owner, but also to just start an initial relationship between whether it's Banner, whether it's Columbia, whether it's your own bank and your own lender. We are here to support as Craft 3 in that conversation, or to potentially even partner with those banks with additional capital. That's also something we've been able to support with. All the pictures that you've seen in our slides have been actual borrowers as well. So, you know, we have a lot of work here in the Pacific Northwest, and we're excited to be able to support you wherever you may be at. Julia, back to you.
Fantastic. Thanks so much, Stephen. And no worries. My apologies. CDFI, you're not a bank. Gotta get that right. So right now we're gonna pause here. I'm gonna stop the recording. We'd like to thank everybody for attending our workshop today. Please be sure to check out washingtonapex.org for any more information on upcoming government contracting workshops. Thanks so much, everyone. Take care. We'll see you in the next one.